When you take population growth into account, GDP fell 0.5%. The third quarter in a row, it hasn't gone up. So what Australians are feeling is a per capita recession.
If we tell you that Australia and Canada rank almost similar in the world economy, then you might get us wrong. First of all, the two nations are widely geographically apart, and they share almost everything. Talk of the similarities in their economic structures, their policies, and even the unique challenges they face, the two nations are actually on a race to be on top of the global market. For instance, Australia, known for its vast landscape and rich natural resources, boasts a robust economy driven by mining, agriculture, and a burgeoning service sector. From the mineral-rich outback to the bustling financial hubs of Sydney and Melbourne, Australia's economic landscape is as diverse as its terrain. While Canada, with its expansive wilderness and abundant natural wealth, has built a strong economy with significant contributions from oil, gas, mining, and forestry. Coupled with a thriving service sector, especially in finance and technology, cities like Toronto, Vancouver, and Montreal are at the heart of Canada's economic growth. Looking at these two economies, what are their key industries? Who are their major trade partners? Also, in this video, we're going to examine the policies that shape their economic landscapes and the challenges they face in an ever-evolving global economy. Who will win this fight? Taking ourselves back in the late 1800s, the gold rush made the town of Charters Tower in Queensland so wealthy that it even opened its own stock exchange. Now, over 100 years have passed, and Queensland is already feeling the effects of another mining boom coming to an end.
Gold is one of the most sought-after metals in the world, and it runs thick through the veins of Charters Towers.
The mining industry is notoriously volatile, yet Australia has demonstrated remarkable resilience through its fluctuations. At its height, mining investments accounted for a substantial 9% of the country's GDP, driven by Australia's rush to supply China with iron ore and coal, resulting in significant profit surges. However, when demand and prices for these commodities fell, mining companies curtailed their investment in major projects, leading to reduced spending and job losses. Similar economic cycles have also occurred in Canada, and in the 1850s, it saw North America's first major oil boom. Over the past 30 years, increasing investments in oil and gas have bolstered crude oil production and export volumes. With technological advancements and rising oil prices, investment focus shifted towards oil sands projects in Canada. However, since 2008, declining oil prices have slowed economic growth from Western Canada to the central provinces, causing contractions in both the service and manufacturing sectors. The service and manufacturing sector of both nations are also very robust and has indeed been at a forefront in pushing these two nations forward. Canada and Australia boast diverse service sectors that dominate their respective economies, but with distinct focal points and growth drivers. In Canada, the service sector accounts for approximately 70% of the GDP, encompassing key industries such as finance, insurance, real estate, healthcare, education, and technology. Toronto serves as a major financial hub, backed by a strong banking system and a growing tech sector, particularly in artificial intelligence and software development. Meanwhile, Vancouver and Montreal have emerged as significant technology centres. The sector provides the majority of employment opportunities, making it an important component of Canada's economic health. Australia, on the other side, has a service sector that also mirrors Canada in its dominance, also contributing about 70% of the GDP, and key industries being education, finance, tourism, and healthcare, with Sydney and Melbourne acting as the primary financial centres. The country also benefits significantly from its tourism industry, driven by both its natural attractions and urban experiences. Additionally, Australia has a thriving international education sector, attracting students from across the globe. Similar to Canada, the service sector is the largest employer, underscoring its importance to the overall economy. In contrast, the manufacturing sectors in Canada and Australia differ significantly in their contributions to the economy and their areas of focus. For them, though, it's more like their reliance on resources has made them less interested in developing industries that could compete worldwide. That might be why, apart from commodities and outdoor clothing, there aren't many big companies from Australia and Canada that have made it big globally. Their inks are particularly looking at the cutting edge of technology. Products deemed high-tech by the World Bank, such as aerospace, computers, pharmaceuticals, scientific instruments, and electrical machinery, represent more than 7% of the combined exports of OECD members, but only 4% for Canada and less than 2% for Australia. According to the World Intellectual Property Indicators, patents granted per 10,000 people are a mere 5.9 in Canada and 6.7 in Australia, compared to 9.9 in America and 28.2 in South Korea. And this doesn't mean that Australians and Canadians lack talent. In fact, they're quite skilled, as shown by their rankings in the World Talent Ranking, where Canada sits at the 13th place and Australia at the 18th. They also have top-notch universities and some of the highest rates of tertiary education in the OECD. The issue lies more in their innovation systems not getting enough support. In both countries, spending on research and development is quite low, only around 1.7% and 1.8% of GDP for Canada and Australia respectively, compared to an OECD average of 2.7%. Moreover, the total investment in venture capital, which helps fund new businesses with big potential for growth, was just $8 billion in 2023 for Australia and Canada combined, and that's about half of what it was the previous year. On top of that, they're not very open to foreign investment, with strict rules, ownership limits, and other obstacles, making it hard for foreigners to start businesses in these countries. However, both of them are hotspots for immigration. Canada, especially, is notable among countries with high levels of immigration. Australia has maintained its annual immigration target at 160,000. Immigration has played a very crucial role in shaping the economies and societies of both Canada and Australia, bringing significant benefits and posing certain challenges. In Canada, immigration is a cornerstone of the national strategy to address demographic challenges, such as an ageing population and low birth rates. The country has one of the highest per capita immigration rates in the world, welcoming hundreds of thousands of newcomers annually. These immigrants contribute to the labour force, fill skill shortages, and support economic growth. Canada's immigration policy is designed to attract skilled workers, entrepreneurs, and international students, which helps to diverse the economy and foster innovation. The influx of young, skilled immigrants helps to sustain public services and social programs by expanding the toxic base and alleviating the pressure of an ageing population on the healthcare and pension systems. Similarly, Australia has a long history of immigration, which has significantly shaped its demographic and economic landscape. The country has a points-based immigration system aimed at attracting highly skilled workers to meet labour market needs and support economic growth. Immigrants contribute to Australia's economy by filling skill shortages, particularly in sectors such as healthcare, engineering, information technology, and trades. Additionally, the international students form a substantial part of the Australian education sector, contributing to the economy through tuition fees and living expenses. Immigration also promotes cultural diversity, enriching Australian society and fostering global connections. However, Australia faces challenges in managing the integration of immigrants, ensuring they have access to necessary services and opportunities for social and economic participation. Both countries face common challenges related to immigration, such as the need for effective integration policies and managing public perception and social cohesion. In Canada, while immigration is generally viewed positively, there are concerns about the strain on urban infrastructure, housing affordability, and the capacity of public services to accommodate a growing population. The government has implemented various programs to support the settlement and integration of immigrants, including language training, employment services, and community support initiatives. Australia, on the other hand, experiences similar issues, with additional challenges arising from regional disparities in population growth. While major cities like Sydney and Melbourne attract the majority of immigrants, rural and regional areas struggle to retain new arrivals. The Australian government has introduced incentives for immigrants to settle in regional areas to address this imbalance and support regional development. Even though Australia and Canada share a lot in common, Australia seems to be doing better overall. They differ notably in two important economic areas: productivity performance over the long term and the growth of living standards. Productivity is a big deal because it shows how well a country's people can turn raw materials, hard work and ideas into useful stuff. Australia has been doing really well in both of these areas for a very long time. Meanwhile, Canada, along with many other wealthy countries, have seen wages stagnant for decades. Right now, Australia is ahead of Canada by $4 when it comes to productivity, which means they produce more goods and services every working hour. Since 1990, Australia's income growth per person has been half a percentage point higher on average compared to Canada. And when it comes to overall income growth, Australia has been beating Canada by 0.8 percentage points. These might seem like small differences, but they really stack up over time. For instance, the average income per person in Canada is around $58,000 while in Australia, it's about $63,000. Australia benefited in extensive economic reforms beginning in the early 1980s and continuing through the 1990s, which opened up the economy to foreign trade and investment, deregulated markets for goods and financial services, privatised state-owned businesses, and introduced sweeping competition reforms. Simply put, the Australian economy has easily outperformed Canada because of investment. At least until very recently, Australia has sustained a much higher level of investment as a share of its economy. Investment spending is always key to new innovations and technologies that drive productivity growth. Compared to Australians and Canadians, Americans are generally wealthier. However, there was a time when Australians and Canadians were actually doing better. In the early 2000s, their economies boomed thanks to the rising prices for commodities. At one point, around the early 2010s, their GDP per person even briefly surpassed that of the United States in terms of dollars. But their fortunes are clearly linked to the demand for commodities, which could become unpredictable in the long run. Canada can easily suffer a huge blow from its heavy reliance on exporting oil and gas, as there are already ongoing efforts to minimize carbon emissions, meaning in the near future, when the world has moved to greener energy and technologies, Canada might lose markets. On the other hand, Australia might fare better because it already has large reserves of minerals like copper needed for the transition to greener technologies. But it might not escape the reality to come, because its largest trading partner, China, started limiting imports of Australian coal, timber and other goods from 2020 in response to Australia's call for an investigation into the origins of COVID-19. Despite these restrictions, Australia has managed to stay ahead. However, if China's economic growth finally stumbles, as many economists predict, this could really hit Australia hard. While it might not be easy for the two countries' economies to collapse, certain weaknesses in some areas, if not addressed, might mark their downfall. Which country do you think is actually stronger economically of the two? Let us know in the comments below. Thanks for watching. Remember to subscribe and wait for our next episode.